Hey, soldiers, we're in uncharted territory. It doesn't look like these interest rate hikes are having much of an effect. Maybe they're not being prosecuted as aggressively as they should be. Apologies. If you were on that live stream earlier today, depending on when you watch this, we had the live stream on the 26th of July. Fed Chair Jerome Powell at the FOMC meeting, basically explaining his stance in that he raised that rate. We're now at 5.5% for the Fed funds rate, raised it by 0.25%. We had an audio issue, my apologies. So let's just expound on what happened here and how it looks going forward. The gist of the matter is he went ahead and raised that rate. So mortgage rates are going to follow typically in an upward trajectory. We're going to talk about ways to play this in a moment to keep you on the road to financial independence. Car loans, of course, going to flow from there as well if you need a new car. This money just got more expensive, basically. Also, the dreaded variable interest rate on the credit card. That just went up, okay? So we're going to be seeing more interest rates hikes probably. We're going to probably be seeing more because I think the Fed is getting the impression they're not raising rates as aggressively as they should. Now, Powell has a problem on his hands. The unemployment rate is exactly where it was when the Fed started hiking rates last March. Listen, this is important. Make no mistake about it. When they're making these decisions on interest rate hikes, what they want to do is slow down the economy. Now, that sounds good in the abstract, right? Oh, slow down the economy. Oh, slow down inflation. Sounds good in the abstract, but keep in mind, you may be a casualty of those types of decisions because a slowdown in the economy and, what Powell wants to see is less consumption that may result in more higher unemployment. Financial conditions are now far easier than they were last September. And adding insult to injury, the S&P 500 is back where it was just as the Fed started hiking. Hardly the outcome Powell and his henchmen had hoped for in their crusade to crush inflation. All right, so these rates don't seem to be slowing down the economy. Now, we've been over this at length. Are these numbers accurate? Are the unemployment numbers, are they accurate? Are the inflation numbers accurate? There's been a lot of obfuscation. There's been a lot of manipulation in the data. Remember, you go back and, 2 consecutive quarters of negative GDP no longer means a recession, at least not while Joe Biden is in office. Okay, we may get back to that definition. Trust me, we'll get back to that definition once a Republican is in office. Meanwhile, commodity prices are starting to ramp up, sparking speculation that the ghost of Arthur Burns and the Fed era of the 1970s busted hiking cycle is alive and well. So what is Powell to do? Well, he has the press conference. Well, he had the press conference to convince traders and other dip buyers to stop doing that and sell. He wants to, again, see a slowdown. Will he be successful? Well, we're going to have to sit back and watch. Now, look, okay, here's the task for our sector of the socioeconomic strata, all right? Now, we're not millionaires. At least I'm not. Okay, I'm sure we have several millionaires and billionaires that watch Soldiers Finance channel, but I am not. I'm speaking to folk like me, all right? We've got to continue to purchase assets, all right? Now, I implore you to go and sign up, hit that join button. Now, if you're on an Apple product, you got to go out and pull up a Chrome session and sign on to YouTube to do it. That's cool. Hit that join button because we're examining those asset classes and figuring out what we need to do to evaluate assets in order to make educated purchases. That's one thing we do. In the members only section of the Soldiers of Finance channel, we call it the Officers Club. Another thing that you may want to, and we talked about this a little bit on the live stream, but again, that live stream just, it was one of those SpaceX rockets that we learned a lot, but it exploded midair. Listen, real estate. an asset that I like, especially I'm really big on hard assets, because we're going into this environment where will your money really belong to you after the implementation of a central bank digital currency? I like assets I can touch. Now, I'm not saying that my entire portfolio is filled with hard assets. Of course not. But when it comes to real estate, we do have an opportunity here. I want to preface this by saying that real estate is a hyper local market. What I mean by that is simply that I could have a 3-bedroom, 2-story single family home on a 1-acre lot here in spot A. Half mile down the road, I might be in a totally different county, school district, on and on and on, zip code. And these two houses could cost two different amounts of money, have two different, value propositions on them. Okay. Unlike the stock market, it's a national, it's a global market. If you buy at the same time, all other things being equal, you're going to pay the same price for a share of the same company. Now, that out of the way, optimally, which you may find are sellers of real estate who want to get rid of a property, but they know they have to keep it affordable to attract potential buyers. So with the interest rate here, all right, and the price here, then that may very well take them out of the affordability range for the bulk of people who would be potential buyers for that property. So if they lower the price, okay, they can't lower the interest rate. It is what it is. But if they lower that price, they could widen that affordability window. Now, if you're able to buy at a lower price than the comps might have suggested 6 months ago, if you're able to do that, then keep in mind that interest rate may come down at some point, giving you an opportunity to refinance. So playing that variable, all right? That's one way to continue to acquire assets. And you can also employ that strategy through a real estate investment trust. Remember, they're exposed when they go out and acquire these properties, they're exposed to that interest rate as well. Okay? So that's one thing you might want to look at. But we've got to continue to purchase assets. We're facing a perfect storm. We've got a built-in tax cut. Not tax cut. We got the exact opposite. We got a built-in tax hike coming in 2025. It's the expiration of the Trump tax cuts. All right. So right now, you're not hearing anybody talk about increased taxes. Of course not, because we are in an election kind of season, going into an election year. Nobody is going to talk about raising taxes. But when you look at the national debt, you do get the impression that that's something that's going to have to be done. Also understand that when we see these interest rate hikes, okay, we got a little cat coming in here. When we see the interest rate hikes, understand that also means we are going to have to pay more interest on the national debt, right? And that is also going to put us as taxpayers under pressure in the intermediate and long terms. So we got the tax increases, we've got the interest rate hikes, and we still have inflation that is rising, albeit at a slower pace, but it is still rising. So I know that the consumer is under pressure to still maintain some fiat currency that they can exchange for assets, okay? Stocks and quality companies, maybe even a bond. It depends on your situation. I'm not suggesting anything. I'm just going through the assets. Again, real estate, precious metals, insurance policies, putting more money into your business, okay? Because if you're a business owner, that is definitely an asset. But understand, depending on what business you're in, you may be very susceptible to market downturns. Now, if you own a liquor store, hell, have you ever faced a recession? Okay, so I guess since 1929, I think the end of prohibition, liquor stores have been great, been going gangbusters. I've never known a liquor store to go out of business, now that I think about it. So those are some things you may want to consider with regard to what just happened today with these rate hikes. Money just got more expensive, guys. So we're going to have to stay nimble. We're going to have to always think on our feet. There's never going to be a time, because again, financial independence is a journey. It's not a destination, right? So there's always going to be that realization that we have to be ever vigilant, okay? Always thinking about our next steps in relation to this economy, all right? Now, I want you to, speaking of investments, there is one investment phenomenon that, thank God, it seems to be dying. And I want you to check out this video because this is an investment phenomenon that has actually had returns that are less than the broader market because it's not based in economic reality. It's based in pie in the sky and unicorns and, all that stuff. So check it out. And guys, I will talk to you soon.